This is a follow-up video to a video we did a couple weeks ago when we were researching how to research stocks and look at their values and start picking them. And this is going to be part two. So this is the video that we're looking at where you start with $2,806. We found a couple stocks that we're going to put that we're going to invest in. We started off with this amount. Today we're up a little bit over the last week. We've been kind of we're up 1.2% in the last month. I'm up 7% here, so not too bad for a month. But the stock market's been pretty good, so that's not surprising. But what we do is when you feel, well, I don't want to say confident in your stocks because you never want to be too confident, but when you think you've done your research enough that you can continue to hold these stocks, and I would say, you do this with the intent to hold the stocks for a while, anywhere from 6 months to a few years. You'll see how these, as they grow over time, it will give you that more confidence. So what I'm going to do is look at where we have some stocks that didn't go up as much as the other ones, and you can see here we've got, I don't need to make the screen bigger. I think we can see it. Things like CVE is up 9%. And we didn't start off with a lot of money, so the gains aren't going to be anything outrageous. We made $7 on this one. But remember, if you have a lot of money or you're continuously adding to it, it could be quite significant. But we've got a couple that I would say the majority are doing okay. 6% here on EQT. ACS, ASC is almost 2%, but we've got a couple that have gone down. So let's go ahead and just let's open those in additional windows. So that one's down 3%. And again, this is the total return. So that's down 3%. This is down 4%. This is only down 1%, 2%, and the gambling one is 5%. GAMB. So let's look at the pros holding. This is engages in provision solutions to optimize the process of selling and shipping the digital economy. That doesn't sound like old stuff. What I try to avoid is anything that's old technology, or maybe there's a new process, like anything that has to do with manual machinery or non-robotic creation of materials. What I want to see is if it's a new company that's into the robotics or into AI, not the fluffy stuff that's everybody's investing in, but it has something to do with it. Basically a technology that's not going to go defunct over the next couple of years. So this one was down, so let's go ahead and buy a share here. And it is 6:02 in the morning, so it's an hour and a half before the stock market opens. Some of these will purchase, some of these will purchase at the opening of the stock market. Okay, so this one purchased. You can set, I'm not too worried about setting limit buys. What a limit buy is, and I'll show you here as an example. Aneco Eagle Mines, and this is still at a good 100% ratings. When I look at the other ratings, it looks good, so there's still a positive momentum there. So this is how you do a limit buy. So I'm going to say limit order. Now it's at $48.99. I want to make this purchase, so I can say, okay, buy up to the point where it's $49.50. Now, because we're off hours, I can set this to extended hours, and it will keep this purchase until May. It'll probably purchase it this morning. This is not enough shares. Oh, I should probably put the share amount in there. We'll buy one share. Review, buy. Okay, so purchase that. So that's just a limit, but we're not going to do the rest on limits. We're just going to do market purchases because none of these are going to be too outside of the market price. You could limit shares, or usually if there's a low amount, or you want to buy a certain stock when it drops to a certain amount, you could set that limit. Say like this is $15. I want to buy it when it's $13, and I could set a limit for 13. And when it hits $13, it purchases it. But we're not really too worried about that because all of these commodities or securities are all in the negative anyway, and that's where I want to buy it, is when it is below its value. So we'll buy a share here of Navigator Holdings and gambling.com. We'll buy a share here. And the idea is that, you know, once a week we'll come in and we'll look at what stocks are in the red. And I'm doing this because I have a confidence that these stocks are going to increase at some point. And I'm going to keep purchasing them. I may even purchase some that are in the green. You know, really good companies that I have faith in. But today I'm just showing you what I do on a weekly basis. I'll start investing into the ones that are in the negative. So right now we have 211 bucks left. We're still at that. We're at 28.46, and we'll check in next week. Now, if you're curious to see if going off of the valuations that we did, you can go back into another tool that you use and see if these are still under the lowest analysis. What I do is I just come and look at the Robinhood rating of it, and as long as it's still, you know, at 100% buy, I'm gonna be cool with it. All right, so see this EQT, what is this, gas production. All right, so this analysis is now kind of starting to split up, and I'll watch this one. Right now, the energy prices are fairly low, so we'll see where this goes. This is probably, if I were to sell or get one off of our list, this would be one I'm looking at. I mean, we've made 13 bucks on it. So think about if we had, instead of 2,800, we started with 28,000. This would be, you know, add a couple zeros to that. But anyway, we'll continue to do this. And so we took some of our buying power and bought some of these lower stocks. And I'm going to do a little bit more evaluating on this EQT, see how I feel about it, and maybe I should sell it. We're up, what was that, 5%, and we'll see. All right, well, thank you, and we'll look forward to part 3 in a week or two.